Hi, everybody. Jen Berbas with the Berbas Group coming to you with the March real estate numbers. I am taking a break from my Claude Code adventures where I'm building a lot of fun new tools for our clients and our team to discuss what we're seeing in the Austin real estate market this spring. And it's a really weird shift. The data is all over the place, and I'm looking forward to talking to you about it. So sales in 2026, March of 2026, are up 5% from this month last year. Really big change. Also, pendings are up almost 12%. I'm going to talk a little bit more about pendings in a bit. I think it really matters what subset of the market you're looking at. So, for example, when we're talking about months of inventory, you can see that here on the bottom of this chart. We have 5.2 months of inventory, Austin citywide. But it really matters what type of product you're talking about. Are you talking about a single family home? Are you talking about a condominium? Condominiums right now are over 12 months of inventory in Austin. It's unbelievable how much condo inventory there is. And by condo, I don't necessarily mean A, B units, right? So in the central city, we have some of these homes where there's two single family structures on one lot. They have a common element. That is a type of condo. What we're really talking about is either high rises, really high inventory in the north part of the city, where a lot of that was built at that time, right, in the 80s and 90s. There's a lot of that kind of condo inventory. And because there is 12 months of inventory, it's very difficult for a seller to sell that type of property in this current market. But if you then shift to the core of the city, 12 miles from downtown, single family homes, which that's that chart that we always collect, we only have 2.9 months of inventory versus the city at large for single family homes is over 4 months of inventory. So it really is important to drill down to the data in the specific neighborhood. I don't remember any other time since I've been paying attention to the data at this level for the last 10 years, where different pockets of the city were so vastly different in the results that I think consumers are getting or able to get from either buying or selling. Average days on market is 101 for the Austin area. It is not that high for our listings, but again, it really matters what you're talking about. There are condominiums that have been sitting on the market for a really, really long time. Yes, of course, the average days on market is going up, but in the central city, you're still getting multiple offers in neighborhoods like Allendale, Hyde Park. So, and those days on markets are like 3 or 4 days on markets. Some of our properties aren't even hitting the market. This happened last spring in Hyde Park with some larger homes. Our properties that we were listing didn't even hit the market. We were able to leverage really, really high prices in the off market. In two different situations, we went 15% over the last print in the MLS, and a different situation where we went 5% over the last print in the MLS. This is high level data, and it can really look very different once you start diving into the data for a certain neighborhood. Lakeway has 11 months of inventory at one point last year. So really, it's specific to the area. There isn't a broad stroke that you can paint the Austin market with right now. This is that single family home within 12 miles of downtown, the weekly chart that we collect. The really important things I think from this chart this week is we are down 14% in available inventory this week in 2026 versus the same week in 2025. That's incredibly important. And we are up 7% in pending homes line properties. So the orange line, the second line, we're at 669 pending properties in the last 30 days. That number is higher than at any point last year. I think that's very important for sellers to realize that the market is constraining for buyers right now. If you have a unique property with a unique configuration, and by that I mean something like 2,000 square feet in Hyde Park, you are likely to get really, really good results if you're a seller, and you are likely to have to be competitive if you are a buyer. But this has been telling a really interesting story. Yes, the inventory is down 14% from where it was last year. But another thing we have to keep in mind is we are coming off 2 years where we've had the highest inventory in 14 years, and the previous year, the highest inventory in 13 years. So it's not 2021 craziness just yet. We are seeing multiple offer situations, and so people have to be ready for it. Consumer sentiment is the thing that is really surprising to me. I think that the behavior of the consumer out in the marketplace versus consumer sentiment just doesn't make sense to me. This is a metric that's been collected in the US, an economic metric, gosh, I think since the 70s. I should really go look that up. This is the lowest consumer sentiment that we've ever had in the United States since this metric has been tracked, which is really surprising to then at the same time see this burst of buyer activity in the Austin market. The burst of buyer activity does not track with the interest rates. If you look at the 5-county metro average median sold price, you see that it has actually gone down in the last year. But when we're looking at some of the properties that we're selling, we are noticing that we are able to sell them 10% higher now than we were last fall. So what I want to caution people against is, yes, if you take all the transactions in Austin and average them together, the average price has come down, but this could be representative of, properties over $1 million not transacting, properties under 500,000 transacting at a much greater clip. So while this number is accurate, it's also important to see like what the number is made out of. And what we're noticing is even though this is going down, there are some neighborhoods where pricing has increased by 10% in the last year. A little bit is that a strategy, and a little bit of that is the time of year. And just people getting lucky with the time of the year that they're selling. Pending units, this is what we talked about. They are up a tremendous amount. Some buyers are getting caught off guard with this. It's interesting. This week, while I've been talking to buyer agents that are showing our listings, we've actually been sharing our data, that weekly data chart that we collect, because if we can educate our colleagues on how hot the market actually has become, it actually works out better for our sellers. So we've been sharing the data widely so that that our buyer colleagues can understand the level of activity that we're seeing on our listings. So interest rates. Given how active it's been in the market in Central Austin, you would think that interest rates were on the lower end of the range for the last year. They're not. They're actually at 6.4-ish. They have come up since February, where they were closer to 6. And the buyer activity, just to me, doesn't seem all that consistent with either the global news or the interest rates where they are. With the global news, oil prices skyrocketing is going to be inflationary, which should drive mortgage rates up over time, because the expectation is that the Fed is going to have to raise the overnight interest rate to try to fight inflation. So that 10-year should go up with that, and then mortgage rates follow the 10-year. Thanks so much for taking the time to listen to some updates on Austin real estate. If there's anything we could ever do to help you, either from the buy side or the sell side, or just share some data or names of vendors, we're always happy to do it. Just give us a call. Thanks a lot.